Welcome to my Apple review of my trades thus far and a plan for Thursday and Friday. I've caught myself overtrading again. Don't know why I keep watching this 5-minute time frame. It doesn't matter to me. It's not important. I want to catch big moves, so I need to stay on the 15-minute time frame, and that's my takeaway from this week so far. All right, first up here on Monday, got in some 175 calls here at the ADMA touch here, which happened to be around 173.5. As you can see, it was a nice support play. Got in 93, trailed out at 111. Did leave some on the table as it did come up higher, but I was looking for a bigger move, so I got a little greedy. No trade on the second touch of the ADMA. Next day, I noticed a break above this trend line. Got in some 175 calls at 80 and closed those out up here at 85. Not a huge gain, but this was a massive reversal candle and should not have even tried to take any calls after that. But in hindsight, you can always identify that. Um, Whatever the case may be, I ended up staying bullish on the day. Got in some 175 calls again here at 144. Came down, hit the ADMA again, broke straight through it. I saw some buyers on the tape, and instead of obeying my rules and just closing out and waiting, I added at 129. um, as you can see, that did not work out. Trailed me out down here finally at 113. So what should have been a very small loss, I actually doubled my size and took more of a loss than what I really originally planned. And that's not how you trade. That's not how you make money. It's not how you stay profitable. This is why I do these trading journals, trading videos to keep myself on point. And when I do start slipping, I have to kind of reset myself and get back into the groove. Later on in the day, I got in some of the same calls again at 109. Again here, I was watching the 5-minute time frame, was definitely not the thing to do. But the 15-minute candle did look promising at this point, and it was in my support zone. So I did take some 109, or excuse me, 175 calls at 109, trailed me out at $1 as it started to fail this level down here. Based on the 5 and 15 minute again, I got in some 175 calls again at 99. As you can see, they made a nice move up because they were so far out of the money. Excuse me, those are for next week. Uh, because they were so far out of the money, it barely moved. I think they went up to maybe 110 or so, and there was really nothing to do after that. The next day, today, Wednesday, got my average down a half a cent. Nothing huge. Once this 5-minute candlestick did fail, I went ahead and got out. So there was no reason to hold that. And this next trade was a prime example of over trading and just trying to force something. I got in some 172.5 calls at 99 cents. It was a break above a green candle. Looked like it was going to hold the low range of the day, which did fail. As you can see here, out again at 90. So I've had a string of losing trades now. It's really ruining my average. This is why I need to maintain my stance on a higher time frame. This would not have been a trigger on a 15-minute nor a 30-minute time frame. It's just my fault, and I'm going to learn from it and move on. Later on in the day, price action did come down again. Broke straight through the 21 EMA, looked like it may have been a failed breakdown, and again was watching the 5-minute instead of the 15. I got in some 172.5 calls at 144 and trailed me out down here. Can't quite hardly see that at 139. So overall was a small loss. Of course, it wasn't on the same candle I got in. Got out for a small loss right there, and that's good trade management in my opinion. When it does fail, I have to get out. So later in the day, I did start catching myself and made a little bit of correction. Later on in the afternoon, I did not take any trades until this pattern set up. Yes, this is on the 5-minute time frame, but I did get into some next week 172.5 calls. We'll see what does happen. This is an inverted head and shoulders. Measured move of this is up to around 171.80, which brings me to my trade plan. I'm going to stay on the 30-minute time frame for all my next trades. If you remember from my previous video, I said if price action does blow through this support zone, I will turn to bearish trades. It has blown through it, and if I see heavy selling in this range here, I will gladly take some bearish positions in some puts and look for a reversal to come down below, at least touch these lows again. However, as the case may be, and we had that inverted head and shoulders on the 5-minute, which is a reversal pattern, and the trend is still up. I am in some calls. I'm going to stay bullish for now. But as I said, if I see heavy volume on the sellers up here, it's time to go with the trend, go with the strength, and start selling it down. All tech is getting smashed right now, whether it's profit taking or whatever. Who really knows? But at these levels, if I see selling at the ADMA, 21 EMA, or just in general in this region here. As I said, I will take puts. My stop loss currently for my 172 calls is down here. It's just over $1 away, so it's just over the full delta of the calls. So we'll see what does happen there. Overall, that's going to be my only trade plan for now. Sorry, it's not more detailed. Just kind of have to go slow for the next few days. I think coming back from my little vacation, it's kind of messed with my head. So just gonna have to regroup and get back into it. So we'll see what happens throughout the rest of the week. Good luck.